Good afternoon, and thanks for joining the Colorado Department of Labor and Employment for our continuing employer webinar series. This month, we are focused on bringing you information, resources around Colorado's new paid family leave insurance program. And we have a few experts from the division joining us today to walk through the basics of the new program, what it means to your business, how you can start preparing now. We're also excited to announce today that next year in 2022, we will be hosting a monthly series just focused on Colorado's new paid family leave program. We know this is new to our employer community, it's new to our workforce, and the Department of Labor and Employment wants to make sure that we are arming you with all of the information and resources you need to most effectively prepare for implementing this new program and sharing information about it with your workforce. So with that, we'll go ahead and talk through a few housekeeping items and turn it right over to our experts. And I want to make sure, moderator, I am not seeing the slide deck, so give me just 1 second here. Hopefully you all are, even if I am not. Great, thank you so much. So next slide, please. Oops, I'm sorry. Can you go back 1 slide? Okay, the presentation and the recording of the webinar today will be available both online and sent out to all of the participants on today's webinar joining us today. If some folks did submit questions ahead of time, which we greatly appreciate, but you still will have an opportunity to ask your questions at the end of our presentation, please use the Q&A function for that rather than the chat function, as that is disabled. Again, as I mentioned, this is our ongoing series. We held about 10 webinars this year. It's the first time the department has engaged the employer community in this fashion. All of these webinars are available on the department's website, which we will share in the chat. Topics have ranged anywhere from unemployment insurance premiums, what you need to know, dealing with pandemic UI charges, workers' compensation, how to start a registered apprenticeship program. Again, great content available for you on our website. Next slide. So you may know us as a regulatory agency, but we also offer a number of other support services and resources for Colorado's employer community. We have a number of incentive and compliance assistance programs through our workers' comp division. There is a premium cost containment program available to employers who demonstrate an outstanding commitment to workplace safety, a variety of public safety, compliance and assistance programs, a VOC rehab, helping you navigate the world of accessibility compliance and what you need to know to create an accessible workplace. And of course, wage and hour guidance navigating all things related to labor law and wage and hour. We also have a number of employer recognition programs each year. They range from, again, workers' comp, cost containment, outstanding safety programs, to Governor Summer Job Hunt, recognizing employers who are committed to employing youth, and a variety of number of recognition programs. All information about those is available on our website as well. Next slide. So with that, I'm pleased to turn it over to our panel of experts to walk through what Colorado's paid family leave program means to you, how we can support you. Again, at the end, we'll leave some time open for your questions. Please feel free to use the Q&A function. And we'll also close out with contact information for you so you can stay engaged with the department. So with that, I'll go ahead and turn it over to our division director. Thank you.
Thanks so much. So for those I haven't met yet, my name is Tracy Marshall, and I have the honor of being the division director for the state's new family leave program. Joining me today on our call will be Lydia Wologorski, who serves as our policy manager, and Joshua Mayers, who serves as our branch manager. The main goal of today's presentation is going to be just to start building the awareness for all of our employers about the family program and the role that you would have within the program. And also to try and start giving you some information and some tools that you can use as you're beginning to talk with your employees about this and socialize it amongst your employee groups. Over to Lydia. Next slide.
Thank you, Tracy. Hi, everyone. My name is Lydia Wologorski, and I am the policy manager for the family division. And we're going to start with some basic definitions in terms of what is family. And so family is the family and medical leave insurance program. And this is modeled off of what has happened in 9 other states. And so 9 other states have a paid family medical leave program within the United States, as well as the District of Columbia. But nobody wants to be first or last in policy implementation. And all of those 9 states are modeled off of what other states collectively did, some dating back to World War II in terms of a temporary disability insurance policy. So many states have had temporary disability insurance policies in place. Some of those go up to 30 weeks in the case of Rhode Island, 52 weeks in California, 26 weeks in Hawaii. New Jersey has 26 weeks for disability leave. And so all of those states have given us a path forward and a model to go off of. And so what makes Colorado very unique in that, though, is that we were the first and only state so far to pass at the ballot. So most of these states did these through the legislative process, but Colorado, of course, went to the ballot in November of 2020 and passed a Proposition 118, which is now our family program that we have the privilege and honor of standing up for the state. Before it passed with the ballot, though, this was a conversation that was in our Colorado legislature for about 7 years. And so for those 7 years or so, I had the honor of being a stakeholder in that process as working on the policy development, specifically around the need for family violence leave, as I was the public policy director for the statewide Domestic Violence Coalition for a number of years. So this has been vetted through other states. We have learned through other states in terms of their pitfalls and their successes and their challenges. And we are hard at work getting this lined out for Colorado. With that, though, this is a social insurance program, and we have the capacity to cover all workers in Colorado. So we will talk through today which businesses are covered and which comes into family, but the spirit of the ballot was certainly to cover everyone in Colorado. And we'll go to the next slide as well. So we know that many large companies have the ability to offer paid family medical leave to their employees, but our small businesses have not been able to do this simply because of the cost. And so this is one of the things that government does well in terms of making sure that there is a social pool of need, and then we are able to take care of the costs as a government function rather than individual businesses taking care of this. And so, with this, we are able to make sure that we have the ability to cover everyone in Colorado. That includes gig workers, that includes people that are self-employed. We know that for workers, they've always had this need. There's always going to be a need. And we know for employers that there's many times that a worker has had the need for leave, and that we feel that we want to be able to take care of that person. We have a connection to our employees. We want to make sure that we are able to take care of them when the unexpected happens, when there's an unexpected diagnosis, when there's a car accident, when something happens. And so workers and employers have told us for years that employers have been trying to scramble to try to take care of this on their own within their own shop, and that's been a barrier. And so this program can actually help take care of workers and employers when that need arises. And so one of the benefits of this program, and this has been documented through other states and documented through our own discovery process, is that this actually can help increase that employee retention. We know that when you hire an employee and you take the time to train that person, that knowledge is invaluable, and replacing an employee takes time and money. And so being able to retain your top talent and your good eggs on staff because you're able to support them when they need care the most actually helps with that retention and helps you retain that top talent in terms of you're no longer as a small employer having to compete with the larger corporations and companies that have been able to traditionally provide this benefit. We also know that it is difficult to navigate the challenges of any program like this. And so It's harder when you're doing it on your own and when you are a smaller employer trying to figure this out, and maybe you don't have access to a large HR department, or you don't have access to this. And so with the family division brings the ability to help people navigate those situations for their employees and their employers. And so we're going to talk about the mechanics of the program in terms of how this actually works and how this is funded. And I'll turn it back over to Tracy to go through that. Next slide, please.
We're actually heading over to you, Josh. My apologies.
Yeah, actually, it's me. Hi, everybody. Good afternoon. I'm Josh Mears. I'm the branch manager for the family program. I'm going to go over some of the reasons why you can be covered for this new leave plan. So first, it's for your own serious health condition. It's also for serious health conditions of a family member. I'd like to just extrapolate on that a little bit. So we've broadened our definition of what a family member is compared to FMLA. So our program also covers siblings, grandparents of yourself and your partner. We also have it's covered individual with whom the claimant has a significant personal bond with, like a family relationship. So we'll have to clearly define that, but it expands a lot more from the family or FML program. Also covers bonding, which is the birth or foster placement, adoption, or care of a child after they're born within the first year of birth, military exigency leaves, and safe leave. Employees will receive up to 12 weeks for this leave. Those that experience pregnancy or childbirth complications can get an additional 4 weeks for that. We just want to focus that it's not solely for bonding, that there's a lot of things that this covers for all the employees and people here in the state of Colorado. Next slide, please.
Josh, if you could get a little bit closer to your mic, they're having some difficulty.
Oh, sorry about that. I can speak up a little bit too, so sorry. Back one, we went too far. Back to slide 8. How is family funded under Prop 18 or 118? There's a lot of information on here. So employers and their employees are both responsible for funding the program and may split the cost 50-50. The premiums are set to 0.9% of the employee's wage, with 0.45% paid by the employer and the other 0.45% paid by the employee. Employers may also elect to pay the full amount if they choose to offer this as an added perk to the employee. So that's totally up to the employer and their discretion. The big difference here is businesses with 9 or fewer employees do not have to contribute to the program, but they do need to remit the employee's share for the 0.45% of the premiums, and that will be on behalf of the employee. This will be done through a simple payroll deduction. Employers who offer their own paid leave programs may apply for an exemption. The goal of this is to give employees about 6 months prior to premium collection to evaluate private plans that are available out there and what might suit them best. Self-insured plans are permitted, and that's what we have there. So I'm going to turn it back to Tracy now for funding of our program.
Thanks, Josh. So family is funded, it's on a fee-based schedule. If you could go back, let me see. There you go. That's the one. Thank you so much. So our rate through 2024 is funded from fees that equate to 0.9% of employee wages. The expectation right now is both employer and employee contributions to the fund. And as Josh mentioned, that is a 0.45 split for each. The employers are allowed to be more generous, right? If you are able to pay 0.7 for your employees, that's certainly something that you are able to do if desired. The rate would be set by myself based on data that we gather in the coming years of the program, and it will not be adjusted until 2025. What we've seen in several states is that premiums have actually decreased as their programs have become live, and they have had the ability to increase the benefits that have been going out to individuals over time. Obviously, it remains to be seen for the state of Colorado, but it's certainly been reflected that way for other states. There is a statutory cap in place, which means that this can never go greater than 1.2%. Next slide. So for those of you that enjoy seeing the math behind this slide will give that to you. So here you can see that annual income, the multiplication that's needed by that 0.009, and then you will calculate your employer and your employee share. This is based on the Federal Social Security Administration cap. It's currently capped out just north of around 140,000 annually. And one of the things to note in this is that the benefit follows the individual. So they can combine their income from more than one employer, which is especially critical for gig workers or those that have multiple part-time jobs is the best option for their life. So we do want to make sure that that benefit goes with the individual person and it's not tied to a specific employer. Next slide. This slide kind of gives you that high-level overview of what you can see at the lower end of your employee group and towards the top of that federal taxable wage cap. So you can see here, this is based on our numbers for 2021's federal taxable rate, so maybe adjusted before we go live next year. But the current minimum wage in Colorado when this was calculated was $12.32. You could see that that equated to an employer responsibility of $2.22 per week. And if you, the same obviously for the employee, because we're doing this 50-50 split. And then if you go to the higher end where we're seeing that cap just north of that 140,000 mark, you can see that the maximum an employer would need to contribute is $12.36 per week for their employee. So this is not the easiest thing to remember. So what we'll do, we'll take you over to our recently launched family website so that you can see an easier way to access the calculator if you're not really a math whiz. So I'm going to share my screen here. She says, let's see. Oscar, I'm having difficulty with my screen share. I apologize, everyone. Can you give me access to share my screen, please?
Moderator Oscar, are you able to give Tracy?
Yeah, she should have access now.
Let's try again. Okay, here we go. All right, you able to see my screen? Thumbs up. Yep, perfect. All right, so here you can see the family's website, which went live a few weeks ago. Up here you can see family.colorado.gov. And we have started putting some content in here for you. There's different tabs along the website where you can look at, individuals and families' perspectives, employer perspectives. We have our news, our events, the rules that Lydia has already worked so hard on are included in here as well. So it's certainly a useful resource for you to head toward. If you scroll down on this main home page here, the number one question people want to know, how much will I pay? So you can just click on this premium calculator right here, and it will take you to the premium and benefit estimator. So if we wanted to put in an approximation here, we could click on this being an hourly wage-based employee, and I'll just put in here a rate of $15.50. I'm going to say that last year this employee worked for 30 weeks, and they worked 36 hours per week. So we can see right here that the employee costs would be $2.51, and the same for the employer. We can also enter in here if we needed to for a salaried employee. So you may have a salary employee, and the yearly income is $68,000. And you can see right here, again, your weekly employee contribution, and again, that employer contribution. So this is certainly something that you're welcome to utilize and you are welcome to share with your employee groups. Okay, if we could go back to the presentation, please. All right, and next slide. Thank you. So as you can see on this, not everybody receives the exact same amount of benefit. So this is very much based on an equity versus an equality perspective. So equity meaning that each individual or group of people is given the same resources and opportunities. So we do recognize within this program that each person's circumstances are different, and therefore the family benefit allocates the resources and opportunities needed to try and achieve that equal outcome. So it's a proportional, this is proportional to the average weekly wage for Colorado, and therefore we can anticipate that it may increase over time. I'm going to hand off to Lydia. If we could go to the next slide, please.
Thank you, Tracy. So when we talk a lot about what guardrails or protections does Proposition 118 offer, we talk about protections for employers and talking about protections for employees. And so we have a few of these outlined here. The question that we most likely get, or most frequently get, I should say, is that how does this interplay with the FMLA, which is of course our federal unpaid leave law that we have in the US, as well as HIFLA, which is the health sick days law that we just passed last year. So the coordination of benefits of this will be a unique set of rules. It will coordinate benefits, of course, with workers' compensation, with unemployment insurance, and all of those pieces. One of the guardrails, though, is that this does run concurrent to the FMLA. And so someone is only able to take the 12 weeks that is available to them under the family program as paid leave. If they have additional FMLA time, say for a military exigency, which under the federal law, you get up to 26 weeks, you're only going to be taking, we're only going to be paid for under the Colorado program, those 12 weeks. And so it's not going to go above the 12 weeks or the 16 weeks for pregnancy complications with this program. There will not be a 12 week plus 12 week plus 20 equals 24 weeks. It is going to be that predictable amount of time that the family program will be able to cover for those employees. We ask that employees give you advance notice of this of leave, and that you're able to use your customary internal procedures and controls with them in terms of navigating that leave. There's an appellate system for both workers and for employers in terms of saying, we missed this calculation, or this was a problem with the leave. And so we are partners to you as we figure this out, and we want to be partners. We also are accountable to the legislature in terms of we give out an annual report. So this does not run concurrent with sick days in terms of, we know that there's been a lot of questions in terms of what are sick days and what are leave time. Sick days are sick days in terms of this benefit is for leave, and those leave functions that have to be for that qualified reason or purpose that Josh went over earlier. And so if someone needs a random sick day because they have a cold or a flu or something contagious, that will fall under the paid sick day leave law that we have in Colorado. If someone gets into a car accident or has a larger diagnosis that they need recurring time off for, or they need a large chunk of time off for, that's when family kicks in. And that's one of the things that is a protective factor in terms of this is really for those periods of that greatest need for that catastrophic lead time. We also have a feature in our Colorado language that allows this to be a portable benefit between employers for our workers. And so it's not tied to that individual employer, it is tied to the benefits accrued by the worker. And so once a worker has made $2,500 within the state of Colorado, they are then eligible for the family benefit once they've made that amount of money over 4 quarters with an alternative 5th quarter for a look back period. And they have a documented need for leave that is one of those covered areas. And so once they become eligible for benefits, they can take this benefit with them if they change jobs. So as an example, say I'm working for company A up until Friday. I start my new job Monday, and then on Wednesday, what happens if I fall and I break my leg and I'm unable to work my manual dependent labor job? I still get that benefit, even though I'm newly attached to my new employer. I still get the benefit because I've paid into the state's program and I've become eligible for benefits under the amount of money that I've made in Colorado and having a need for that qualified documented leave of a serious health concern. There's job protection after 180 days if someone has been in employment with you, and the rules will be very clear on that. But we do allow this to transfer among employees, and we track that per employee, not so much with the individual employer. Okay, and I think next slide. There we go. Great. So the big question of the day, of course, is, so what does this mean for me and how do I get ready for this program? And so this program starts in terms of benefits 2024. We're going to do a year of premium collection starting January 1, 2023, and that is consistent with all the other states that have done this. And so the other states that have done this, and again, we're not an outlier here, and so we take some comfort in that, and I hope you do as well, have had similar ramp up times in terms of their legislation has passed, and they've had about 2 years to make this happen. And so the only waiting period for family is going to be this first year, this 2023 year, and then the benefits go live in 2024. But thankfully, we have 2022 ahead of us. And so 2022 is this golden opportunity and this moment for us to work together, to partner together, to learn about this program, and to make sure that you as an employer have all the information that you need to be able to communicate with your employees what this benefit is and is not. And you are prepared for both the January 1, 2023 premium date, as well as that looming date out there of that January 2024 when benefits go live. And so we broke this up into quarters for folks. And so we are here for you as a division. We're offering webinars. We have our website. We have a email box that you can email random questions, and we will answer those questions and send them out to you. You are welcome to request presentations, and we will do our best to comply and give you the information and materials you need to be successful at this. And so that's quarter 1 of next year. Quarter 2, we want you to be able to share information with your employees. If you are a member of a professional organization, maybe you're a member of a local chamber or some other professional organization, having your professional organization work with us and partner with us, or figuring out where you want to get your information from is great in terms of us being able to work with them, give them information, and make sure that they're able to give you actual and factual information as needed. We will also be doing rulemaking. We started rulemaking this summer. That's ongoing. That's going to go in perpetuity for the life of the program, as those of you that are familiar with rulemaking know. But we're also planning for some user experience and some discovery testing. Some of you were contacted, or a few employers were contacted over the summer in Colorado and given the opportunity to work with our discovery team to make sure that we were designing a program from that very user-centered perspective. And so we want to make sure that people can use the system, people understand the program, and can use it when they need it, right? And there's no ambiguity, no gray area around how you pay your premiums or how you get the benefit, that all of that is ironed out. And we know that we can't do that unless we ask the right questions and that we engage members of the public and we engage employers. every bit as much as we engage anyone else. And so we will continue that discovery process, and we anticipate being able to do some initial user testing, meaning as we build the technical portal that we need to be able to do this program, that we're able to have welcome people in that are not in the division, to try it out and say, this button's too small, or I need to be able to do it this way or that way. And so we will be recruiting for that. In Q3 next year, in 2022, we anticipate being able to register people into the system, and so that you come in as a registered employer and you're able to, again, log in, make sure everything is smooth, and you have a plan in place. We're here to help you give model language to your employees and be able to explain this well. We'll be here ahead of that 2023 premium launch with workplace posters for you to be able to post in your work site and have that information out. And then Q4, so right before we go live, we will help walk up payroll deductions for premiums, and you can start that. Many of you likely use QuickBooks and Intuit and other third-party administrators to help you manage your payroll all the time. And so we will help you be able to set up those payroll deductions in terms of the system should be live. If you have technical questions, we'll be here to make sure that we can answer those and get you logged into the system ahead of that January 1, 2023 date if needed. And then also Q4, because the ballot does allow for someone to use private plans as well as self-insured plans. Being able to notify us that that's the route you've chosen instead of going through the family site, we'll be able to receive that documentation and be able to guide you through those next steps there. So we have that ramp up year of 2022, and we look forward to being engaged with you throughout 2022 and getting ready for that 2023 go live with the premiums. And I think I turn it back over to Josh.
Thank you. So I'm going to go over a little bit on how we're getting this done. So we're really focused on connecting and making value. So we're building a culture of care here. This is really to take care of our Coloradans, and the employers and everybody, make sure people are getting the time off that they need with paid supplemental help. So what we're doing is early and regular employer engagement. We're doing a lot of community outreach and support. Proposition 118 set the framework. So the rules and the floors, and the foundation are there. Rulemaking began in 2021, like Lydia said, and they're ongoing. So we, ask you guys to please get involved in that. Those are out there for you to be partaken in and have your opinions heard. Technology and digital services are the doors and windows for entry in the flow of information. So again, as Lydia mentioned, user experience and human-centered design really is our focus here. We want this to be a user-friendly experience, people not to be, oh, this is a government program, it's complicated and robust. We're trying to really get it simplified and take care of people as easy as we can. When employees do well, so do the businesses themselves. And that's about what we have on that one. So next slide, please. Next, I'm going to go over implementation and planning timelines. Back one. Oh, wait, where did we go? Yours isn't matching up with mine. I'm on one more. Or did I skip? No, slide 18. There we go. Sorry about that. All right, here's some important dates and times for you all. Countdown starts January 1, 2022, when the first set of rules are enacted. Those are, actually out there and can be found on the Colorado Register. So please take a look at those. Summer 2022 public outreach campaign kicks off. So a lot of stuff, as we mentioned, will be going out, trying to give as much information that we can. Fall of 2022, user groups will be recruited and invited to begin testing the systems and uploading wages, documents, etc. Premium collections begin January 1, 2023. Summer of 2023, user groups will be recruited and invited to begin testing the claim management system. December 1, 2023, the public may apply for benefits ahead of time to begin that 2024 leave plan. Benefits are available beginning January 1 of 2024. And those are the big timelines we've got. Next slide, getting started. Some key stuff here. It's important to engage your HR team, third-party administrators, payroll companies, everybody that can start getting together, sharing this information, figuring it out as the program goes live will be very beneficial to all of us. Share this information with your peers and professional membership organizations. There'll be recordings available, things like that. So again, networking is the best way to get information out there. Partnering with us during the development. This is big. Participate in the process, rulemaking hearings, like mentioned before, testing sample messaging for employee handbooks, stuff like that. We ask you to share your expertise, be a user group tester, get out there, give us some feedback. Contact us for free technical assistance if you need anything. Email the family email address. We'll share that at the very end so that you can send any general questions, stuff like that. We just ask you to help us get this right, by you guys being engaged. We want to hear your concerns, questions, work out all the kinks. We want to make sure misinformation is not being given, because that will cost the program money and employers and employees time and energy. So please help us out as much as you can. We would like to, if you'd like to learn about family, again, we encourage send the emails to that email address. We monitor it, get out some information to you as quickly as we can, or point you in the right direction. We would also like you all to engage, so we're asking for your feedback. You can put some comments in the comment section, or when we go to the live chat, as far as what are the best ways we can engage with you to give you more information. Is that newsletters? Is that more webinars? Things like that. So please provide that information to us so we can help everybody. So that's the big stuff we need to get started. And I'm going to turn it back to Tracy to start going over some of our advanced questions that we received.
So I'd like to take a pause here and flag. We have quite a few questions in the Q&A in addition to the questions submitted. So I realize a lot of the questions either chatted in or submitted, we may have already reviewed some of those during our presentation. Just know that if we don't get to all of the questions today, they will all be answered and sent out afterward along with the recording in a PDF. So just for the interest of time, we certainly want to do our best to get to all of the questions. That's really why we're here today. So just want to add that in, and we can go through the slides first, Tracy and Lydia, and then we can turn it back over to the Q&A.
Great, thank you so much. We could go to the next slide, please. So I've got about 6 or 7 questions that came to us ahead of time. So we have put responses to these out there, and there seems to be a theme in kind of the Q&A that we've got that's happening live as well. So how do employees of local governments who opt out pay their premiums? So local government employees can self-elect coverage in the same manner that any self-employed person would. So they'll be able to register independently. They'll be able to submit premiums to the program, and they would be able to have access to the family benefit. Next question we had is there some sort of new law requiring employers to pay into some account like the workers' comp insurance? The family program is a statewide insurance program. So as we stated earlier, we will have contributions from both employees and employers. They pay that fee based on their wage requirement. And then if they need to utilize the benefit, they would have to have documentation to support that they have a qualified reason for the leave, whether that's a medical-based leave or the safe leave, whatever kind of leave they would need to take. We will have requirements around that before we issue payment. Next questions here. Next slide, please. Our company has 10 employees. Does this affect our business? So yes. All Colorado businesses of 2 or more employees will be impacted by family. Businesses with 10 or greater employees will be required to pay a quarterly premium equal to that 0.9%. And again, you can have that 50-50 split of whether that's being paid by the employee or the employer. Will this be required of all employers or specific to employers with a certain amount of employees? Again, similar to the question above, and also a theme that we're seeing in the chat thread here, that yes, this does impact all employers with larger than 2 employees. And our final slide for advanced questions here. Does this apply to owner employees? As a sole proprietor, you may choose to opt out of the program. You may also choose to opt in. So you have that flexibility. How could we use existing PTO to cover family? So the family benefit, as we saw in that sliding scale earlier on, provides a partial wage replacement. It would be up to individual employers as to whether or not they offer a top-up using any paid time off to bring them up to a 100% off wage level. Does this apply to reimbursable employers? And yes, family does apply to all employers, with only local governments having the ability to opt out of family coverage after a vote. So those were our pre-submitted questions. I would ask maybe Lydia, if you could maybe tackle a few of the questions that you've seen in the chat so far.
Yes, thank you.
Thank you.
Okay. There are a multitude of questions in here, and some of these we'll have to get back to you on, but some of these I'm happy to take. If we don't answer your question specifically today, we will type these up and get these out to you as well. Okay, so we have a question in terms of, can you speak to how this program relates to the new law, which is HIFA, which is the Healthy Family Worker Act that we have in Colorado. So that's when we talked about our paid sick day leave law. And so I think many of you are already familiar with this, but this is a new law in Colorado. And so this law allows workers to accrue time that they can use for sick days. And I believe they can accrue up to 40 hours of sick days. And so a sick day is a sick day. And so you would use your accrued time under HIFWA. Applying for leave is a whole other separate process, right? And so if I go out for a sick day, I don't necessarily need a doctor's note explaining why I had a serious health condition. I don't need to apply for benefits. That's something that's calculated internally within the business, with the business and the employee. Leave is separate in terms of, this is a major life event. This is a cancer diagnosis, a serious car accident, something that is going to take me longer than a week to deal with, or it's going to be something where I have an ongoing need. So, maybe it's chemotherapy where I have to go in intermittently. So when we have those leave times, that's when the family benefit would kick in. And when someone is receiving family, they're being paid from the fund. Their wages are paid from the state and from the fund. They're not being paid by the individual employer as you would with sick time, because the sick time is the accrued benefit that is paid by the employer when you're out for a sick day, versus this paid family medical leave, the state would be paying that part of the wages. So I hope that answers a good part of your questions, Carissa, and we can answer that in more detail. We also have this question addressed somewhat in our frequently asked questions section of our website. Okay, so next question, what is the deadline for local governments to elect to participate? There is no deadline for local governments to elect to participate. The local government rules are out in draft form. They were just published on the Colorado Register December 10th. And we have our public rulemaking hearing for local governments on January 6th at 5 p.m. And so you're welcome to take a look at those rules and to look at questions. There's not a deadline per se. If a local government is going to opt out and they don't want to pay premiums, and they don't want to be considered, for the benefits at that point, you should probably do that before January 23, when the premium liability starts to toll, but there's not a deadline. In fact, local governments can come into the program at any time that it makes sense for them to come in, when they're doing their regular budget and they're planning for their next fiscal year or so. They're always welcome to come in. When they come in, we propose that they stay for 3 years at a time, similar to how a sole proprietor or a gig worker might come in for 3 years at a time, but there's really no deadline for that. Is this gross wages or adjusted wages after cafeteria deductions? So this is, we're not changing the definition of wages. We've mirrored UI, or unemployment insurance, that most employers are already very familiar with in terms of how wages are calculated. And we've not changed that definition. We're using the same wages definition. So if there are exemptions in UI, we found an exemption in family. For people that are just taking part of family through their employers, that is that definition of wages. So the similar definition that you use for UI, you're going to use for family. If I am a self-employed person, you have the ability to say whether or not you want to use your gross income or your net income. And that's a lesson learned through the pandemic. Actually, is in terms of our self-employed workers, we're having trouble following that calculation. For folks that are, self-employed, that have, attorneys and are generally self-employed, that are comfortable with using a net deduction, you're able to use that number for both your premium and your benefit calculation. But many of our low-wage workers or gig workers might be more comfortable with gross. And so the program has a rule to allow people to elect which one they want to do. I'm with a county government. If we choose to opt out, the employee will still have to go through the state. Will we be notified when an employee has applied for this? For county government and for local government, if you opt out as a county government, you still have a couple of options. And so you can say, we're opted out, and then the employee could come in as a self-employed worker, similar to how gig workers and self-employed folks will do. And so they'll be able to create their own account as their own employer. They'll be able to log in, enter their wages, pay their premiums online, and they'll be able to apply for a benefit if they have a need for leave. So that's one option. Another option is paying the premiums on behalf of your employees is really a simple payroll deduction. And so you might be familiar with this in other ways, in terms of many local governments say, we're going to allow our employees to contribute to United Way, or Colorado Giving Campaign. And so the employer agrees to do a simple payroll deduction, collect that payroll deduction, and send it off to that third party. Local governments can also opt to do that if they want. If a local government opts to do that, where they are helping the employee submit their premium to the department, then the local government by rule has access to the local employees that have signed up for the family benefit. And that's part of the checks and balances, in terms of, I'm collecting a premium from you, your premium is going here, and then I've got this receipt essentially saying, yes, your premium is here and you are enrolled in the program. So I hope that answers your question. Those rules are published and available for you to look at, and we're happy to answer further questions you may have. We are an employer whose home base is out of state. We have one employee in Colorado. Will be responsible for the ER portion of the contributions. Yes, so similar to if you're paying, again, this is another great example of how we've kept this similar to unemployment insurance. And so if you pay Colorado unemployment insurance for that employee, you'd also pay the family benefit for that employee. And we followed suit for all the other states that have done this. And so we're not unique in Colorado to that, where we are localizing that employment. And so we calculate the size of you as an employer based off of all of your employees, whether or not they are in Colorado or abroad. And so if you are paying Colorado unemployment, or you would owe us Colorado unemployment, you would also owe us the family benefit or premium. Can you explain the 9 or fewer employee requirement? Yes. So this is one that was maybe answered through the presentation, but just a real quick touch base on this. If you have 2 through 9 people employed at your organization, then you would only have to remit their premiums. And so you as an employer will be responsible for a payroll deduction where you collect their part of the premium. So that half premium, that 0.45 of the 9%, right? Or the 0.9%. You would collect that premium from them and you would send it to us, and you would send that to us quarterly. And again, we tried to mirror that process that people are familiar with. And so once a quarter, same as you would log in to pay UI, you're going to log in and pay your family premiums to us, but you're only giving us what you collected from your employees. For employers of 10 or more, that's when the employer kicks in their half of the family premium. So that's the other 0.45 of that. And I'm not sure, folks, how much more time we have to answer questions, so I'll just keep going until someone chats me. Okay. We are in seasonal employer, less than 180 days. How does the benefit follow the employee when they don't qualify for FMLA? This is a great question. So this is when we talk about those portability of benefits. The eligibility starts when two factors happen. So one, the employee has made $2,500 within the state of Colorado or localized within the state of Colorado across a year. And so we're doing 4 quarters with an alternative 5th quarter look back period. So say an employee works for you 180 days, but before they worked for you for that 180 days, they worked somewhere else. If they've made that $2,500 somewhere in the state up within the year of working with you or for you, they're eligible for the family benefit, because the second prong is they have that qualifying incident. So again, it's not a sick day. It's not a, it's not something that normally occurs, but one of those things that somebody would use FMLA for, or the federal benefit, those big qualifying events, that's when they can apply for the program and be eligible for that. And so it's not tied to the seasonality of the employer, because the benefit follows the person. In terms of the 180 days, that's when the job protection kicks in. And so if you're a seasonal employer and you only have that person for 180 days, and they go out on leave on day 160, you're not required to hire them back, because one, that job has ended, it's past the season, and two, they hadn't been with you long enough to have the portability benefit. So that's a great question. Thank you for asking it. And if you have follow-up questions, we're happy to help. Okay. I think we've answered similar questions. The Social Security wage base. The Social Security wage base is going to go up every year. We have an estimate of what we think it's going to be in 2025, but we're not publishing the 2025 rate until we get here. That is set every October. And so as we need to adjust, we'll adjust that well ahead of the next year. And so the changes we anticipate moving forward will happen on that January 1 mark when they can. And so we're very cognizant that employers need time to be able to change systems and time to be able to change the payroll deductions and to be able to adjust that. So thank you for that flag. We're working on it. For a person who is tipped minimum wage of $9.30 an hour plus tips, what wage and this amount is figured? So again, and this goes with the next question, which is, does this apply to all wages, including bonuses? So wages are wages. And we've kept that definition that we already use in Colorado as wages. So I'm not going to do the quick math in my head, but having worked in the service industry for a number of years myself a while back, if I am not making enough tips to make that to make up to that minimum wage, right? If I'm requiring, or if I'm counting on those tips to make part of my wages, then that is part of the wages that has been traditionally under the definition of wages in Colorado. And so that tipped amount would then count as wages for that. You're responsible as employers to reporting the tipped wages that are reported to you as wages. That's why, servers, when they clock out, every night put in their tips, and so you don't get the whole allocated tip with the tax implications at the end of the year. And so if it's falling underneath that and you're aware of that, you're already counting those as wages for UI. You're going to follow the same piece in family. Okay. Is there a cap?
Lydia, for a time
Yes.
check, we have about half an hour left and we still have at least a couple dozen plus questions. So let's try and group them if we can. There's a couple questions regarding para. So as you move through, if you want to skip some that seem to be similar questions, as I committed, we'll send all of the responses following today's webinar. Sorry to interrupt, just wanted to check in on time with you.
No, thank you. And I have not been able to scroll through all of the 53 questions right now. And so I will group to the best of my ability, but we will make sure that these are answered for you. Okay. Let me scroll down to a para contribution. Are these deductions pre or post para contributions? That is a great question. I'm not sure we've addressed those in the premium rules so far. We're following what UI does in terms of wages, in terms of what is a reportable wage for your UI. And so we will certainly look into that and get back to you for this. For local government, individual employees can opt out, but they must offer family coverage. For local governments have the ability to opt out of this program completely. And so if people come into the program, they do so as an individual, and they do so as a self-employed person would if they are working for a local government and the local government wants to opt out. Similarly, schools, as they are considered, schools are not necessarily always considered local governments. It depends on how they're in here in terms of higher education is not necessarily considered under local government. Otherwise, if you are in a K through 12 school district and that's local government, you're not exempt to the program, but your school district or your governing body can opt out. So it's a little bit different in terms of when we think of exemption, we say the program absolutely does not apply. But the way the ballot is written, everyone is in the same pool as all of Colorado. And so you can exempt out with your local government, but you still have to do that exemption or opt out. You're not just automatically exempted because of where you work in the state. Okay, this is a great question about third-party insurance. If an employer who opts out with self-insurance or third-party insurance, or is it in the employee, is it the employer who opts out or the employee who opts out? It's the employer. So if the employer would like to offer private insurance, and we are working on the private insurance rules right now, but that insurance has to be the same. It has to match in terms of the cost cannot be greater for the individual employee than the state benefit would for it to be a qualifying private plan. And so in large companies or in companies that want to work with private plans are welcome to do so. Companies are allowed to offer self-insurance. With self-insurance, the state will ask for a surety bond for that to make sure that that employer can cover the benefit should an employee need to take it. But it's absolutely up to the employer to do that. The goal of Proposition 118 was to cover all employees as much as possible. Ministers are not covered by Social Security. Will the minister be subject to family? So this isn't, yes, the family is for those, if you are a sole proprietor, if you and you're not employed by anyone, you work for yourself or you're a 1099 worker, you have the ability to say, I don't want to participate in this program, and you don't have to do it. if you are working for an entity that covers like 2 to 9 people, say, and there's no exemption for churches or nonprofits or for the small employers, you will be impacted by this in terms of needing to remit the employee share of this. And so there's not a specific exemption under the ballot for churches or small nonprofits. What is a qualified plan? Is it short-term disability? That's a question that certainly Tracy and Josh can chime in and answer as well. But and we're certainly happy to flesh this out for you. There are some FAQs on this on the website, but the qualified plan is a little bit greater than most short-term disability pieces in terms of it's got to cover all of the qualified reasons that Colorado says you can take a family leave for. So it's going to be a little bit more than many of the short-term disability products that are currently on the market. It's going to be something that's tailored to matching the family benefit.
Right, and this plan can run concurrently with a short-term disability plan.
Yes, absolutely. What percentage of the employee's wage will be paid weekly while on this leave? So that goes back to that chart that Tracy walked through in terms of to make this an equitable program, the percentage is matched to the amount that someone normally works. And so if I am a low wage worker, I'm going to be able to receive a higher amount wage replacement, up to 90% wage replacement, to help make me whole and to help make sure that I can use the benefit, and that the time that I can actually take time off, and I don't have such a dramatic decrease in my take home pay that I wouldn't be able to use the program, or the program would still not allow me to actually take time off. So for low wage workers, you're going to have about 90% wage replacement, and then that ratchets down depending on the amount of wages earned, down to 37%. And so for a high wage earner, then you're going to take home a little bit less in terms of the benefit. And we know that high wage earners are likely to have more savings, or likely to have other supports, other insurance programs. The chart is a great place to start on that. But if you go back to our website, the calculator will let you see your benefit amount as well. Of course, benefits are capped at $1,100. And as Tracy mentioned in the presentation, that is pegged to the state's average weekly wage. And so as time goes on and the average weekly wage in Colorado changes, that top benefit amount and that cap is likely to change as well with the calculation. But that's a great question, and you can see that in the benefits calculator. Can we cancel an employee's health insurance if they do not pay their premiums during FMLA leave? There's actually a prohibition against that in the ballot language. And so while someone is attached to you as an employer, you are required to keep all of their benefits in place for them while they're out on leave. Can employees opt out? Individual employees cannot opt out.
See another one here. Will this be a separate filing, or the unemployment taxes? It will be a separate filing.
Yes. I'm scrolling through questions. Some of these are similar to what we've answered. So thank you for asking these questions and for your patience as we try to get through them. Will we receive a form similar to an unemployment claim to verify if an employee's leave is valid, or is the employer responsible for verifying the leave? That's a great question. And so this is done in conjunction with the employer in terms of there will be a communication from the division saying this person has applied for leave. And you'll be asked to verify the dates that they're attached to you, that they're going on leave. You'll receive that notification. Unlike some other states and unlike other programs, it's not so much a permission, but it is a notification. And so we encourage employees to work with their employers because the whole point of this is to be able to return to that work site. And so, we will, as a division and department, be in communication with you in terms of the leave that has been applied for, somebody's eligible return date, and when they expect to anticipate to come back to work. And so if you think about, this is really for those leaves that are where people anticipate being able to return to work.
I think you've hit on quite a lot of these, Lydia.
I'm not sure we answered. There was the question about the combination with unemployment insurance, and they had a follow-up about forms similar to a UI claim. I think you did answer that, but we want to make sure we did. These are separate programs. So what you will receive from family is different from what you will see from unemployment insurance. And I think the question is, how is the leave validated by him? Lydia, I do think you answered that one.
Yeah, and that's going to be in the benefits segment, which doesn't roll out actually until a year after the premiums rolls out. We will have a form to be submitted by the individual requesting a leave, requesting that benefit payment. More to come on that one. All right.
Our participants are leaving us, so I'm wondering if we can just scroll to the bottom and kind of check through what, if you all asked a question, it's very likely it's already been answered, but I certainly, as committed, we will get to every question, even if it's not live during this webinar. You will receive an answer as a follow-up.
Correct.
If there's no more money in the individual's fund, does it stop paying out? We had this question. So the benefit follows the person, but again, so similar to insurance, the fund is not particular to that individual. It's a social insurance fund, so that if I'm paying in, $2.26 a week, right? I'm likely going to get a benefit amount that's larger than what I've paid into the program. And so that's just the insurance pool that we're working out. And so the fund will have enough. All of these funds have been solvent in all of the states that have done this. The fund will be able to pay them for that 12 weeks that they're out within a year, whatever they've earned, which is of course proportional to what they've been paying in as premiums, but it's not a dollar for dollar match.
You see that what will the frequency of filings look like? That's going to be quarterly in the same manner that you would for UI. So same frequency.
Yes. Is this tax deductible? So there's no state taxes associated with family. This is an enterprise fund, and so these are fees. And so we don't worry about the state tax implications. on this in terms of tax deductible at the federal level. The IRS has not given clarity to any of the states that have paid family medical leave programs in terms of how they will treat this. So we do anticipate we will issue a 1099 or miscellaneous tax form to folks in terms of the benefits that they received as well as the premiums that they've paid in. And we encourage you to consult your individual tax professionals on how to treat that until the IRS issues clear guidance to all of the states that have the paid family medical leave programs. Okay, this is a great question. If an employee goes on family in December, will the 12 weeks start over in January if it's, or is it 12 weeks per incident? It's the 12 weeks is on a rolling period. So for an example, if I go out on leave December 1, 2024, I'm not eligible for leave until, November 30th, 2025. And so it's a rolling year for benefits and the claims that you made in terms of a claim year. And those start when we start paying benefits to you. It's not based on a calendar year.
So rolling back calendar, you may have heard of that term with your short-term disability plans or, other leaves that you offer, but it's a rolling back calendar. Exactly.
The places where we can mirror FMLA and their process that are still true to the intent of our Colorado ballot, we are working to do that. And so we're trying to not recreate the wheel as much as possible. So this is familiar to folks as they need to do it.
I see a question here. If an employee is no longer working, say retires, what happens to those monies they paid in and did not use? We're continuing to explore different opportunities and options there, so more to come on that one.
You have an employee who knows they're moving out of state at some point in 2023 for military. Do they still have to pay their employee portion? So the premium liability starts on January 1, 2023. And so for the time that they are, in Colorado and a Colorado employee, this will be a payroll deduction for them for the time that they are in Colorado once the premiums go live for this. So yes, they pay into it as long as they're in the state of Colorado. We have a lot of questions that are similar to things that have been answered. So I apologize if we didn't get to your question.
So I think at this point, any questions that are outstanding, we'll certainly send responses to. We'll make sure we try and bucket these a little bit to consolidate responses as much as possible, because again, in the live format, it's difficult to be succinct for you and not be repetitive. So we will definitely get to those, as was mentioned by our moderator earlier on. So I think we can go to our next slide, please. All right, thank you so much. So again, we just want to really say thank you for your time today. Thank you for the interaction. These are the kind of questions that are going to make this the best possible program it could be. So keep them coming. Please don't be afraid to reach out to us. We're happy to connect with you pretty much anytime. So just reach out to us. Let us know what we can do to help and support as we move through this process. Our email is CDLE_family, FAMLI, _info@state.co.us, and you are certainly welcome to reach out to us. As you've already gathered, Lydia is our policy expert and has done a fantastic job of fielding these kind of questions and making sure that we design and develop policies that work well for you. All right, thank you so much for your time today.